Good morning, everyone. As you can see, I'm not Craig Miller. Unfortunately, he's unable to join us today, but he has left South Africa and definitely will be joining us this evening. So I will be representing Valterra Platinum on his behalf. Before I begin, please note the cautionary statement displayed behind me or in front of me. I encourage you to read it in full at your convenience. Following our successful demerger from the Anglo-American Group, we stand at the beginning of an exciting new chapter. Let me start by sharing the meaning behind our new name, Valterra Platinum. Val is from value and embodies the value we bring to life, to the minerals we extract from the earth, but also through the integrity of our actions and the futures we help shape. Terra is a Latin word that reflects earth. It grounds us in our origins and reminds us of our duty to protect and preserve the planet that we all depend on. Platinum is an expression of value and the enduring worth we create and which the world needs. Collectively, it reflects our standing as a global leader in the production of this extraordinary metal. Valterra Platinum is more than just a name. It's a promise of purpose, responsibility, and excellence. I would like to reaffirm who we are and our strategic priorities. Valterra Platinum is a leading platinum group metal producer, strategically focused on extracting value out of the existing assets in Southern Africa. Our operations are in South Africa and in Zimbabwe. We have 3 marketing offices in London, Shanghai, and Singapore, and we proudly employ over 29,000 people. Our strong market capitalization of approximately $11 billion and annual revenue exceeding $6 billion reinforce our position as a significant player shaping the future of the PGM sector. We have a world-class integrated portfolio of assets, from mining to processing and to marketing. Through this integrated value chain, we produce high-quality metals for our customers and create sustainable value for all our stakeholders. Among our peers, we are the undisputed leader in the PGMs industry, leading in attributable mineral resources, inclusive of mineral reserves. We have a strong track record of generating earnings, on average exceeding those of our peers. Our portfolio is truly world-class. Its scale and geographic spread gives us unmatched optionality, allowing us to adapt and respond to market dynamics and with agility. Our mining operations are supported by integrated processing facilities. We're always concentrated before moving through smelting and refining, allowing us to capture the full value from mine to market. And with our dedicated marketing teams positioned in key global hubs like Shanghai, we maintain direct access to major markets, ensuring we serve our customers' needs optimally and efficiently. We operate the largest PGM smelting furnace capacity in the industry, with 11% more capacity than our nearest competitor, and a total power capacity of 183 megawatts. Our furnace operating philosophy is backed by a robust rebuild program. This has given us absolute confidence in operating fewer furnaces at higher utilization rates, driving both efficiency and reliability. In addition, our advanced refining technologies allow us to produce high-purity PGMs and base metals with exceptional recoveries, ensuring top-tier performance from concentrate to final metal. As a company, we are guided by clear and our powerful purpose to unearth value to better our world. Our strategy is anchored in 5 key priorities. First and foremost, our drive towards zero harm remains our top priority. We are also focused on building a simplified and strengthened organization led by an experienced executive team with a strong track record of delivery. Operational excellence is another core focus area. We continue to drive our operational excellence program to maintain our position in the top half of the industry cost curve. At the same time, we are investing in what we believe are some of the most valuable assets in the PGM industry. Through disciplined capital allocation, we aim to maximize returns while recognizing the unique contribution of each of our assets. We are also committed to driving demand for our metals by supporting and developing emerging opportunities that will ensure long-term success. And finally, sustainability is at the center of our strategy. It anchors everything we do, from protecting people and the planet to creating lasting value for all of our stakeholders. At Valterra Platinum, we remain committed to a balanced and disciplined approach to capital allocation, ensuring an effective balance between reinvesting in our business and returning value to all our stakeholders. So moving on to why PGMs matters and the market dynamics. PGMs are and will remain globally strategic. Their importance continues to grow across industries and regions. About 80% of the world's known PGMs reserves are located in Southern Africa, placing us at the heart of the global PGM supply. PGMs have also been officially classified as critical minerals in many countries and trading blocs, underscoring their essential role in modern economies. Beyond their industrial value, the societal benefits of mining and processing PGMs are far-reaching, from job creation and infrastructure development to technological advancement and environmental innovation. At Valterra Platinum, we mine and refine the entire suite of PGMs, as well as nickel, copper, chrome, and gold. PGMs are at the heart of our business and account for 85 to 95% of revenue over the last 5 years. In 2024, more than half of our gross revenue from precious metal sales emanated from Asia, with a sizable proportion from China and Hong Kong. This aligns closely with broader global trends. In 2025, China alone accounted for about a quarter of gross PGM demand and nearly a third of net demand, underscoring its critical role in the global PGM market. In 2024, global demand for PGMs reached 20 million ounces. While the volume may seem modest, the high value of these metals resulted in a substantial market worth of $20 billion. What makes PGMs so valuable is their unique and indispensable properties, which enable a wide range of modern applications. They are exceptional catalysts, playing a critical role in cleaning automotive exhaust emissions and in the manufacture of chemicals. Their remarkable metallurgical properties, including high strength and melting points, make them ideal for use in liquid crystal displays, such as those in smartphones, as well as fiberglass production. Thanks to their stable coordination chemistry, PGMs are also used in a variety of other applications, from pharmaceuticals to LED TV screens. And of course, their attractive appearance and resistance to wear and tarnish make them highly sought after in fine jewelry and investment markets. So let's break down the market demand for PGMs. Last year, investments accounted for around 3% of total demand. Jewelry made up about 5% of total demand. Though it represents roughly 1/6 of platinum demand, with smaller contributions from the other PGMs. Just over a quarter of PGM demand came from various industrial uses. This sector, particularly important for platinum, and also represents the bulk demand for ruthenium and iridium. Looking ahead, this segment is expected to grow, especially with the rise of the hydrogen economy. However, by far, the largest use of PGMs today is the automotive sector. It accounts for 66% of total demand by value, and more than 80% of the demand for palladium and rhodium, primarily due to their role in catalytic converters. Automotive demand for PGMs is shaped by three key factors: the number of vehicles produced, the share of those vehicles that are catalyzed, and the PGM loading per vehicle across both light and heavy-duty segments. Starting with vehicle production, mobility trends are actually more supportive of higher vehicle sales than current forecasts actually suggest. Next, looking at the share of catalyzed vehicles, while battery electric vehicles are gaining ground, internal combustion engine vehicles and those that require catalysts are likely to remain dominant for longer than expected. So take China, for example. Battery electric vehicles reached about 25% of new vehicle sales and continue to grow. But China's context is unique. There isn't a long history of ICE vehicle ownership, and the country has invested heavily in EV infrastructure. Hence, urbanization and reliable high-speed rail also supports this transition. Still, pure electric vehicles aren't practical for everyone. Range anxiety remains a concern, which has led to the rise of plug-in hybrids and extended range vehicles, both of which still rely on catalysts. Finally, when it comes to PGM loadings, tighter emission standards and testing protocols generally lead to higher loadings per vehicle. While automakers sometimes offset this with thrifting, the overall trend remains upwards. This year, we have been tracking several proposed policies in China aimed at strengthening emissions compliance, especially for hybrids and trucks. The first of these policies was finalized in May. There's growing consensus amongst industry analysts that these changes will support PGM demand, and particularly as the next generation of standards begins to take shape. Existing industrial demand for PGM remains strong, driven by economic growth, the rise of the middle classes, ongoing investment in infrastructure, and rapid technological advancement. But what's even more exciting is a policy for new uses. We're seeing growing opportunities in areas like the hydrogen economy, green aviation, e-fuels, carbon-neutral feedstocks, and advanced computing, including AI and cloud infrastructure. As the world accelerates its push for cleaner, more efficient technologies, PGMs will continue to play a vital role, enabling low-energy, low-cost chemical reactions that are essential to the next generation of sustainable solutions. The platinum jewelry demand in China has declined over the past decade, largely due to reduced luxury spend and growing preference for gold as an investment. However, this trend seems to be shifting. With gold prices now just over 2 times higher than platinum, there's real opportunity for platinum to regain market share. If platinum were to win back 10% of white gold's market, it could boost demand by as much as 1.5 million ounces per year. Encouragingly, we are already seeing signs of recovery. Platinum jewelry sales in China have strengthened, and several major brands are launching new collections, signaling renewed customer interest. Now, turning to supply. As I mentioned earlier, South Africa holds approximately 80% of the world's PGM reserves, making it the dominant global supplier. Valterra Platinum, with access to 30% of these resources, is exceptionally well-positioned to deliver reliable long-term supply. Our focus remains on operational excellence, sustainability, and cost competitiveness, all of which are essential to securing long-term value. It is also worth noting that industry forecasts had often overestimated PGM supply growth. Many projects failed to fully account for the financial, sustainability, and infrastructure challenges that producers face. Now, looking at the broader supply landscape, many producers, especially in North America, are cutting costs, holding back on capital spending, and not replacing aging mines. This will inevitably lead to lower long-term supply. While prices may eventually rise to attract new investment, the reality is that supply cannot respond quickly. New projects take years to develop, and the industry is already facing significant delays. Over the past decade, the sector has seen very little investment in new mines, with many operations aging and companies shifting from growth strategies to maintenance modes. At Valterra Platinum, we've taken a different path, one that balances investment in our assets with consistent shareholder returns. This approach positions us well for the future. Still, the overall result across the industry is a shrinking supply base. Of the projects announced in 2012, only 2 are still running today. If current trends continue, supply could drop by as much as 16% before 2030, even as demand remains strong. In 2024, recycled PGMs helped meet demand, but they still accounted for less than 20% of total supply, primarily sourced from end-of-life catalytic converters. This is significantly lower when compared to recycled copper, which makes up about 32% of its total supply. While we do expect recycling supply to increase, it's unlikely to grow at the pace many forecasts suggest. In fact, PGM recycling has often been overestimated. Forecasts frequently overlook key challenges, such as the economics of vehicle scrapping, stricter sustainability regulations, and limiting refining capacity, all of which constrain the speed and scale at which recycled PGMs can enter the market. While there is some uncertainty around demand drivers, there is reason to be optimistic. Vehicle sales are trending back towards historical levels, which is a positive sign for the automotive sector and PGM demand. At the same time, battery electric vehicles adoption has been slower than expected, while both primary and secondary supply remain constrained, largely due to ongoing uncertainty and low levels of investment across the industry. In the short term, cost competitiveness will be critical. Producers will need to manage through a period of low prices while also preparing for long-term growth and value generation as market fundamentals strengthen. So let me briefly explain our approach to market development. In terms of driving demand for our metals, our investment into growing the existing sources of demand and developing new ones is an imperative for us, as it aligns to the requirements for us to invest, given the scale of the endowment that we have. But we will be disciplined in terms of how we allocate capital into market development. At Valterra Platinum, we are well positioned to shape the future demand dynamics of our metals, while continuing to create value for our customers. We do this through 4 key levers. We advocate for a supportive regulatory environment and help shape broad demand narrative for PGMs. We nurture new PGM applications and businesses by funding research and development, taking stakes in startups, and being early adopters of PGM-using technologies. We invest in ventures where we see strong potential for PGM demand in emerging sectors and technologies. And we collaborate actively across value chains, both horizontally and vertically, to drive demand for our products. We have applied each of these levers successfully here in China across various demand segments. For example, in the hydrogen sector, we've been especially active. We have supported the annual Fuel Cell Vehicle Conference held just 3 weeks ago. Since its inception in 2016, it has grown into the world's premier fuel cell gathering. The market development opportunity is substantial. If 10% of new light vehicle sales are fuel cell electric vehicles, platinum demand could rise by 6 million ounces. At the same time, PGM-enriched lithium-sulfur batteries could add 900,000 ounces of palladium demand. Now, turning to China, it stands as the single largest hydrogen market. It has made the most progress today and holds the greatest potential for ongoing growth. The leadership we see here mirrors the advances we've witnessed across other climate technologies. Importantly, as we look ahead, we will continue to support this growth by collaborating broadly to build profitable fuel cell ecosystems that can scale. Gold's 9 million ounce of usage in industrial applications combined with its rapidly increasing price, creates an interesting substitution opportunity for PGMs. We've already identified the first opportunity in this space in China, and we are actively working to grow this portfolio. If just 10% of white gold jewelry shifts to platinum using Inovio Platinum, demand could grow by 1.5 million ounces. All of this highlights the need for proactive market development to strengthen PGM and markets and secure Valterra Platinum's long-term value. While we are optimistic about current markets, our market development efforts could unlock over 50% more opportunity, especially with strong momentum already building in China. These new markets will be key drivers for future PGM demand. Now, to conclude, I would like to emphasize that the world needs our materials, our metals, to enable a cleaner, greener, and healthier tomorrow. PGM market fundamentals remain robust, providing a solid foundation for long-term confidence. China's role in this market is increasingly pivotal. It remains a key market for our PGMs and continues to drive significant demand. When we look at existing demand, it's stronger than previously forecasted. On top of that, we are seeing emerging demand segments, particularly as the world focuses on the energy transition and addressing climate change. At the same time, primary supply is shrinking, and secondary supply continues to underperform. This is resulting in ongoing market deficits, which support a positive outlook for our metals. We are confident in our leading portfolio of assets, supported by a strong resource endowment that gives us real opportunity for growth. Our world-class integrated value chain enables us to capture full value from mine to processing to market, ensuring we maximize returns at every step. We also have the capability within our teams to continue to deliver resilient performance. Operational excellence remains at the heart of everything we do. I am confident in our ability to sustain strong margins well above those of our peers. We will continue to uphold our disciplined approach to capital allocation and maintain our dividend policy. And underpinning all of this is our unwavering commitment to zero harm and to embedding sustainability in everything that we do. Thank you.